everybody. Welcome to the weekly wrap-up here at Verified Investing. My name is Gareth Soloway, Chief Market Strategist here, and we have a lot to discuss. The stock market closing in just minutes, basically at the lows of the day. Two-day loss on the S&P 500, over 10% now. Again, this is all on the back of tariff news this week, with reciprocal tariffs being imposed this morning by China. The question over the weekend is how many more countries are going to reimpose or do reciprocal tariffs back on the United States. So let's get over to the big board here and take a look at where things are. But this is a nasty day by any stretch and a nasty week, right? Look at this. The Dow Jones Industrial Average down 2,100 points. Yesterday down 1,700. Again, massive drop there. NASDAQ down huge on the day, about 730 points here. And the S&P down 5.5% or about 300 points here on the day. And again, this is a two-day total now of over 10%. That's basically a crash, folks. It's not a one-day move of over 10%, but in 2 days, it does put some pressure on various parties out there to figure out how to move forward. Because remember, the wealth effect took us up. Again, we're talking about as the stock market in 2024 was making new all-time highs, we saw investors willing to spend money. This is going to change all of that. You drop 10% in 2 days and they see their 401ks dropping to that magnitude, the spending is going to be pulled back immediately, and you'll have this economy go into a cliff dive. There is no doubt about it, folks. All right, looking at oil today, oil down 6%, massive drop. It's breaking the key level here of 65 dollars per barrel. What does that mean? Well, oil is falling because the expectation is all this tariff back and forth, the trade war is going to slow the global and domestic economy. Demand for oil is going to drop. Therefore, price is dropping to meet that future expectation. Gold today smacked as well. Again, gold usually looked at as a kind of a safe haven asset. But as we know, when people are looking at their portfolio and they're like, oh my goodness, I'm getting crushed on all my stock positions. How many of us like to sell our losers? Most people want to sell some of their winners. And so they're raising capital by taking some profits off of gold, and that's bringing it in. I still think gold goes higher over the mid to long term. But again, you are seeing down 2.5% today on gold. And then Bitcoin. This is pretty remarkable, folks. Bitcoin holding steady, neutral to positive on the day. Even altcoins are neutral to positive for the most part. And that is showing a light at the end of the tunnel for potentially having a new reserve or safe haven asset here. I'm not buying it fully yet, but it is great to see that you're seeing that stabilization in Bitcoin. This is your heat map. It doesn't get much more red than this, folks. Again, I see a couple retail stocks in here that are red. You know what these are? You have Nike. You have Decker Outdoors. Any company that is making things in Vietnam, there was word today that came out earlier that there might be a mutual agreement between Vietnam and the U.S. And those stocks, Nike, Decker Outdoors, and a few other ones that make a lot of their products in Vietnam, those stocks are up. Aside from that, pretty much all red. I mean, look at this. Apple down almost 6%. Nvidia down 6%. Remember, these are all stocks that took a beating yesterday as well. Trillions of dollars being evaporated into thin air. Think about this. As of yesterday, $9.6 trillion since Inauguration Day has vanished from the stock market. That doesn't even include today. I would dare say it's probably close to $12 trillion now that has vanished away. All right, daily chart. Look at this, guys. This is remarkable here. The S&P 500 down 5.8% on the day. Look at this cliff dive right here. One of the amazing things about this, if you take this first all-time high and drop a plumb line down to this low right here, there is a measured move that has completed today, and it does give me hope that we might be due for a bounce on Monday. All right, so again, this distance from here to here, if you take this high and drop it down, it comes right down to that low as well. And again, that's in technical analysis. We call that a measured move. But again, just looking back, I still remember vividly, all right, going back into December and early January, talking about this wedge pattern and saying, guys, when this breaks, it's game over. And I think we can all agree it certainly looks like game over, at least in the short run. All right, let's get back to some charts. Follow me back over to the computer here. And what we'll do is we'll look at the QQQ. This is remarkable. The Q's closing at the low of the day, down 6%. The QQQ was down 6% yesterday. So basically, we're talking 12% drop in 2 days. And from from the highs. Look at this, guys. Remember what a bear market definition is? Down 20%, and we're basically now down 22%. So we are in an official bear market in the NASDAQ. The S&P is close. Look at where we closed. We closed right at the lows from the August collapse, when we dropped over 10% there, and that's where we closed today. Now, this is going to be interesting, so let's come back to me here and let's talk. So we have to look at this and say, okay, where does the give and take come in? Because if you continue to have a trade war where tariffs get ratcheted up over and over again, the stock market will collapse and the economy literally will go into a mini depression. All right, you will have investors pulling back from any spending, and we know the U.S. consumer is the backbone of the economy. So the question is, over the weekend, and I'm going to be watching like a hawk, who gives a little bit of an inch? Is there some word that there might be an agreement? There might be ratcheted down in tensions and in tariffs. These are the things that I'll be watching for on Monday. If we don't get anything and there's more harmful rhetoric, you're looking at another gap down probably of 5% on Monday. So again, Sunday night, the futures open on the S&P. I'll be zoomed in and I'll be watching the news and be ready to trade it. Now, having said that, let's be clear. Drops like this in the market generally breed opportunity. One of my favorites is Broadcom. Broadcom, one of the top semiconductor stocks here. Look at this nice little doji today. It did come off of its highs of the day, but a nice little doji there. You got a lot of support going back here. The stock is down massively. These are opportunities here. Yes, it's panicked and painful to sometimes buy down on these levels, but they usually are opportunities, at least for swing trades. Apple down a whopping 7.25% today. What levels are we into? Well, take a look at this. We aren't at a target just yet, but there's a gap fill down here on Apple at 173. If it gets there, huge opportunity for a technical bounce. In addition, remember this head and shoulders that I talked about, how if it broke, we could do a measurement? So again, if we look at this, this was a shoulder. Here's your head. Here's your shoulder, right? Okay. Now, if we do our measurement and we take the measurement tool here, let's do that now, and we take it from the high of the head to the neckline. This is something I do with you guys all the time, and we map it out. Look at where that line is, basically right down here. So again, if this gets hit, you should get a big bounce on Apple. If we have another down day like today on Monday, Apple could hit it on Monday. Be ready for that. Nvidia today, big drop on Nvidia, down 7.37%. And if we look at this, it's coming into its August low support. There's a lot of support here on Nvidia, folks. Again, a lot of support. Just drag that trend line down. All this sideways chop, it dipped, it came up, it broke out, it retested in August, and now it's back to this level. This is an interesting level. If it breaks this level, you're likely going to $75 a share. Now, what's interesting about 75 is you also had a head and shoulders on Nvidia. Let's do it in. Let's do a calculation here. Let me do up with the proper tool here. So let's draw it in and do our measurement. And I do this because I want you guys to learn how to calculate targets, right? So essentially you take the high of the head, and we have to bring up our drawing tool again, and you drop that plumb line straight down to the neckline. And we take that distance, and what we do is from the break point, that's your target. So notice just a little bit lower than this pivot, but there's actually a gap fill right here. So right in this zone here, between $75 and I would say about $68, that would be a huge opportunity where it would achieve its target, but then also come in to massive support. So essentially what I'm saying here, folks, is that there's opportunities here. Listen, not everything's going to be at a buyable level just yet, but get ready. You know, essentially have some dry powder on the sidelines, because the bounces off some of these levels could be like 10, 20% in a matter of a day or two. I mean, that's how powerful some of these bounces could be. One level I talked about, and we'll go back to the charts here. This is something I went over in the game plan this morning. This was United Airlines, and I had these lines on the chart. Look at this. It pierced, and look at where it closed today, right back above it. That is a technical bottoming tail. That is a buy signal on UAL for a short-term bounce. Now, it could be negated. There's always that chance, but at least as of now, at support, so two factors, bottoming tail and major support here, that tells me this is likely going to trade up in the coming days. All right, let's get over to Bitcoin here. And listen, Bitcoin, you have to give it credit. Bitcoin green on the day, green yesterday when the stock market, again, S&P down 10% in 2 trading days. Now, listen, I still think it's going to go test these levels, but I love, as a long-term believer in Bitcoin, I love the way it's acting here. Let's see if it can continue to do that. Can it continue to ultimately hold up in spite of stock market selling? But ultimately, again, this is great news if you're a long-term believer in Bitcoin. We'll continue to monitor this. Oil. Take a look at this, guys. So remember oil, I actually got out of my short yesterday, which I did miss out on some gains today, but that's the nature of the beast. But if we zoom out on this, and let's go to the big board to dissect this here, guys. So if we look at this chart on oil, we know that there's a long-term trend line going all the way back to 2018 through this high in 2019, 2020, just before the COVID collapse right here. And then we broke out above it. And look, every time we came back into this level, it hits it, hits it, hits it, and hits it right through here. And even recently. Well, today, okay, so today what we saw was it break below this level, but it has not confirmed yet. So remember, it can break below. It's not a confirmed breakdown until it confirms. But I do think while we could be due for a bounce, I've said this for the longest time. I said, listen, eventually oil's going down to 2 major trend lines down here. This is it right here. This is what I'm looking for. And again, listen, that's a 12-month price target, so into next year, but $35 a barrel. And what I've said to you guys as well is that if oil hits $35 a barrel, where's the economy at that point? It's not because we're producing so much. Trust me. Oil's not going there unless we're in a major recession. And again, that tells me again, likely by year end, we are in a recession. All right. Let's go back and focus on a couple of these other charts here. We'll take a look at gold today. If we take a look at gold, gold did have a pretty big down day. Now, this is another good point, guys. In fact, if we looked at this, remember how I said to you guys, probability was a pullback at the parallel. Okay, we got a small pullback here, and then it broke above. And what I said to you guys is, listen, in general, if you look at all the times that upsloping parallels have been had price go above them, it's usually a fake out to try to get the bulls, the last few bulls on board before it flushes them out. Well, that's exactly what happened. We're back within that parallel right here. And listen, I still think gold goes higher mid to longer term, but it's just overbought. It just is what it is. And so again, what I'm looking for is pullbacks into, let's say, 29.50, maybe even as low as 28.50, and then start to accumulate again once we get a pullback there. Now, silver, I did pick up a small position in silver today. I couldn't resist. All right, such a massive drop in 2 days. We were getting close to this support. We have another semi-support right here. So again, we're into this general vicinity. I look for a bounce next week. I did a small enough position that if it were to go down here on a straight line, let's say to 27, I load up even more. All right, so again, slowly dollar cost averaging into positions here on silver and some of these other metals that have fallen apart this week. And by the way, speaking of which, copper, remember when I pointed out this topping tail to you guys? And I said, guys, copper likely topped. Well, look at what happened to it since then. That is a massive drop on copper as well. Even came right down and just like Swiss cheesed right through this technical support. Now copper actually starts to look like it's due for a bounce. I'm going to look for a little bit of a lower move on Monday down to about 428 to 430. Pivot high here, pivot low right in here. If it hits there on Monday, I'm likely going to go long on copper. All right, let's flip over to oil. We already talked about oil, so let's do natural gas real quick. If we take a look at this, nat gas, I am still slightly short with a half position left over, and it did come in. I'm looking for a break of this 377, 378 level with a move down to about 340 to 345, and I'll take the rest of my profits on that. But listen, guys, this chart here says it all. S&P 500 or SPY down 5.82%, over 10% in 2 days. But again, you have a measured move. So let's see if over the weekend, do we get some sort of situation here where we get positive verbiage, maybe not aggressive like, hey, we're going to do more tariffs on you and da-da-da. The aggressive language is literally going to crush this economy if it hasn't already. Regardless of what you think on tariffs, the stock market was the driving force between the middle to higher incomes continuing to spend. We know the lower income, we saw stats, right? McDonald's, if you made $50,000 or less, couldn't even afford to eat at McDonald's. That's what McDonald's said. We saw Dollar General collapsing a couple earnings ago because people couldn't even shop and afford Dollar General. And so the lower income has been in a recession for probably a year or two. The upper income, because of the stock market, it was able to keep the economy going. That is now fully dead. Okay, that is fully dead, and what that means is we'll get bounces, and I'm talking buying some levels here, but these are shorter term swing trade bounces where you get your 5, 10, 15%. I pull the ripcord, I move out of that, and then I wait for the next setup. This is a trader's market. That's what we're here to do, is probability trading here at Verified Investing, and I will be here for you guys as you guys support us here, and we will do the best we can. You guys have a great weekend. I'll be back Monday morning for the game plan. Talk to you then. Take care.